All right, guys, we are back. Happy summer.
Summer's almost over. It's almost fall. Yay.
It's almost PSL season, right? Is that doesn't feel like it
Pump,
here in Texas. We're
pumpkin
still at
spice
95.
lattes.
Hey, I'm
Yeah, for
ready.
me it's been motorcycle season, man. I'm yeah, it's weird being back on camera. I feel so disconnected, but it's good to be back, man.
Yes,
Well,
it
what it
is.
we should probably tell people mostly what you've been up to this summer and why we're not doing as many shows.
Yeah, well, I mean, obviously I've been trading Bitcoin in the community and stuff, but yeah, I mean, I've been on the adventure bike through the mountains of New Mexico, Colorado. Yeah, mostly Colorado, but yeah, hitting up like, just massive ski mountains on my motorcycle. And yeah, it's been absolutely incredible.
And why do you have that boo boo on your face? Is that from falling on your adventure bike?
No, that one's even dumber. I was running through a cave, looking at my phone, filming a video, trying to use the light from the camera, and I tripped on an old mining pipe and whacked my face on a pipe. And I thought I broke my cheekbone, but thankfully it's just bruised. But yeah, I don't know, man. Like we were talking before we hit record, and I told Trav, I'm like, what's that old quote? I don't even know where it came from, but it's like, don't let the old man in. I don't know. Maybe it's me turning 40. I'm just like refusing to slow down, and I'm doing shit this year and pushing the limits on the adventure stuff like harder than I ever have before. So, yeah, I don't know. But a little bump and bruise, I don't care, man. As long as it's not like a major broken bone or falling off a 1,000-foot cliff, I'll be good.
Has Bitcoin volatility not been enough adventure for you this year that you've had to go towards? It's been a little more boring, I guess, but is that
Yeah, I
it?
mean it's been a consistent bull market, right? For 2.5 years. I come on, I need some action. And yeah, I don't know. Bitcoin doesn't do it for me anymore, man. My veins are ice cold when it comes to crypto volatility.
Oh no.
Trav, what have you been up to, man?
Oh, well, I have an even dumber injury story this summer. I basically fractured my toe sliding down a children's slide at a library. So,
Ow, what? How did we not know this?
yeah, it's like just now healing after like a month and a half. Yeah, I don't really want to talk about it too much.
Oh my god.
So that's why you're not on the pickleball pro leaderboard this year.
That's right. I'm just trying to maintain my rating, man. Yeah, it's getting older is real for sure. You injure yourself in really stupid ways, but like you said, you got to try to at least keep it somewhat young. Keep it interesting and exciting out there. But
Yep. Yeah, man, don't let that old man anywhere close to your psyche, brother. Let's
that's
just
right.
let's just stay the young badasses that we've been for decades. Let's just keep it going. Nikki,
Yes.
what have you been up to? Tell everybody where your focus has been in the Airstream.
Well, I've been working a lot actually. I've been working with clients all summer in my little Airstream office while I've had pretty sweet views, which has been cool. Um I've been hiking um and exploring ski towns, which is like my
Nice.
favorite thing to do.
That
And don't
sounds
Telluride.
you have
cheap,
a
right? Uh,
It's not.
now that you're
well,
looking for your second home, in
Good thing
the
Bitcoin's in a
mountains.
bull market and assets are all up, up, up. Everything's up because
yep.
I had some fun in Telluride. I'll tell you that.
Ooh, love it. Well,
We
the
call it
top
the Go ahead.
the signs at the top are getting closer. We have Chamath launching a SPAC apparently, so
Oh man. Yeah,
enjoy it
we've been
while it
in this like
lasts.
slow grinding bull market for too long. I'm like, okay, where's the rug pull? Where's the big dip coming?
I guess that can lead us to our first major topic.
Yeah, which Nick, don't you have to say a disclaimer now?
Oh, just a quick disclaimer. I am a financial advisor, but not yours. And everything I say on this podcast, it is just informational, and you need to speak to your own advisor for personalized advice. And that's it. That's the disclaimer.
All right.
Love it.
And with that said, yeah, what's our first topic? Where do you guys want to go? I don't even know. You guys
I
need to help me
mean,
moderate this one.
I think, right now everything's up, right? I think gold is still up, yields are still pretty much up. At least the 10-year looked semi up. We've got Bitcoin up. We've got S&P up. Everything up. So I think a lot of people are starting to feel the euphoria bubble might burst. So I think that's on a lot of people's minds right now is this market just going to keep going up, or do we have risk ahead, and how do we manage that? So that might be a good place to begin.
Yeah, let's just, I guess, put price action into context for people. So, in the spring, we had the big pullback, which was a very fast bear market, if you even want to call it that, and had a V bottom recovery. And ever since that recovery in early May, we've just been in, at least in the stock world, just this kind of very slow, low volatility, grinding bull market. It's kind of the stairs up mentality, right? And, everything's kind of down today. Stocks are down a little over a point. We've got Bitcoin that's pulling back below the 21 and 50 period moving averages, down a few points off of all-time highs around 124. Even gold's kind of pulling back a little bit today. But yeah, overall, I mean, the summer in general has just been, kind of slow, kind of, on the Bitcoin and crypto side, run retracement extension to the upside, and just been kind of grinding higher. Do you guys think that's been supported by earnings and the macro picture, or is the market missing something? What do you guys think?
On the corporate earnings side, we just got out of the bulk of Q2 earnings season, and corporate earnings performance was pretty good in aggregate. Like we had, I think, S&P 500 earnings up in aggregate 10% on a year-over-year basis. And as always, there's some companies that are doing better than others. Like the Mag 7 stocks and companies are still crushing earnings growth. I mean, Meta had an amazing report. Even Palantir had a further acceleration in revenue growth and just a fantastic quarter. A lot of the hot stocks at the moment, like Robinhood and fintechs and stuff in the frontier tech space, all that's been doing well. So I'd say just generally, earnings still looked pretty healthy in the second quarter. There are some signs on the macro data front that maybe there's some economic pressure on the edges that people are starting to think about a little bit more. Maybe some of the tariff effects finally starting to show up, for instance, in like the PPI inflation data last week. We did have a revision to the jobs numbers in the last jobs report that made it look like, even though we had a couple of months of good jobs data, it turns out they revised it lower. And so it wasn't as good as it actually looked in some of the prior data points. So people are starting to worry about the jobs market, not that much hiring out there right now. And so people are worried about the cyclical effects, also worried about, is AI going to steal a bunch of jobs over the coming years? And so there's definitely some concerns out there, but for the most part, nothing that looks like glaringly obvious, a glaringly obvious hit to, corporate earnings in the near term in aggregate, at least. So, I think the market this summer has been supported by not just the rebound that we got from the April freak out, but also pretty good follow through from companies. And I think valuations are kind of stretched in some areas. Certainly, we're finally seeing a pullback in momentum stocks today. That's lasted for like a day and a half in previous episodes, so we'll see if this has any legs to it. But I think overall the picture still looks okay, and risk asset performance has certainly been great. So until the price action or something on the macro sphere tells us that we really need to get scared, it's hard to want to take that bet.
So do you think the increase in PPI and the inflation scare last week, do you think that's just a blip, or do you think that's an early sign of like higher inflation to come?
That's a great question. This is a big debate right now among people who are, obviously in the macro world and thinking about the macro environment. So the PPI is, inflation that is felt most by producers and manufacturers. And we know that, a lot of the tariff rates are higher than they were when we started the year. And so certainly manufacturers and importers are feeling pressure, and they can kind of deal with the increase in their own costs a couple different ways. They can increase prices, which eventually does flow through to consumers in the CPI. Some people think that's going to happen. They could also take a hit to their own margins, which means, corporate earnings could take a hit, at least in certain sectors. And then, of course, they could also try to resource and get around some of the higher tariff barriers and try to find ways to to either near shore or again shift production to certain countries where there's better tariff rates. So the reality is there's going to be a combination of all three of those things. So there will probably be some price increases on products. We've already seen some products with price increases in certain areas, which will hit consumers, and then some of that may be absorbed by the manufacturers and importers themselves, and then some of it will be supply chains will shift to kind of eliminate some of the worst of the tariff impact. So it'll be a combination of all three. The real question then becomes, okay, if we get a couple months of the CPI ticking back up, there's two things to think about there in my mind. One, is it going to affect interest rate policy with the Fed? Is the Fed going to look through that, as they said they might, or are they going to use that as a signal to keep really tight monetary policy, or even, God forbid, increase rates? Seems not that likely, but we get Jerome Powell's testimony on Friday at Jackson Hole. That'll give us a lot more visibility into that. But the market currently still thinks we get a small rate cut in September. But the second part of it is, okay, if we do see an uptick in CPI and consumer-based inflation for a couple of months, is that going to cause the whole cycle that we saw back in 2021? The risk, of course, is always when you start to get inflation, all of a sudden now you start getting people asking for raises, and you start to get people raising prices, and then that causes other companies to raise prices. And so there becomes like this vicious cycle of higher inflation but getting higher inflation. And that's the risk of the runaway inflation, and you get tight monetary policy, and maybe you end up in a bear market like we had in 2022. Again, I don't know that that's super, super likely at the moment, but it's something that we just have to be vigilant about, in the months ahead.
Well said, man. Nick, anything to add to that?
No, I mean, it's been interesting kind of parsing through earnings, and we have retail earnings coming up this week. They started, and we're going to really get a lot of information about tariffs and how retailers are handling tariffs, if they're, what they're seeing. Like Levi, for example, they said in their earnings report that they were handling it very well. They were managing it, and they didn't really sound the alarm on it. So I think tariffs mostly are going to be really affecting, retailers, and it kind of feeds into the consumer discretionary side of things, which really feeds the economy. So I think I'll really be paying close attention to what we hear from Target, we heard from Home Depot this morning. It actually didn't look too terrible when I saw it, but I'd have to compare it to prior quarters. But we've seen weakness in restaurants. Cava is a popular chain similar to Chipotle. Chipotle, Cava, Sweet Green, a lot of these names, we're starting to kind of see the consumer say enough is enough with the price increases. So could that, kind of be the lever that helps us, flow through this next phase in the economy? The consumer will speak up if it needs to, right? And then that kind of starts to reset things. So that's what I'm watching for.
Restaurants are definitely an area of consumer weakness right now, at least among the publicly traded ones. I thought that was interesting. Like Chipotle has now had 2 consecutive quarters of negative comparable store sales. That was after like several straight years of positive comparable store sales. And then you mentioned Cava. Cava went from growing their comparable store sales at like 20+% a couple quarters ago, and it was only 2% in the most recent quarter. So it was a pretty big disappointment there. And we've heard a lot of the fast food companies, Wendy's, Jack in the Box, they're struggling as well. And so I think, like you said, some of that is they kind of did it to themselves with very, very aggressive price increases over the last 2 to 3 years to try to maintain or even increase margins. And like I was kind of shocked. I went through a Wendy's drive-through not that long ago, and it was like $12 or $13 for a basic burger combo. I was like, what? That's almost fast casual prices. And then you look at like a shake at Jack in the Box is like $6. I'm like, what? A Jack in the Box shake? Like what is happening here? And so I thought, I was actually finding sticker shock in some of those prices as well. And so I think McDonald's is trying to hit back with some of their value menu again. And so I think we're starting to see that competitive price pressure in food bring prices back down a little bit. But yeah, you heard earlier, like later in the spring, also there was a little bit pockets of weakness in travel, although that seems to have kind of gone away. But restaurants in particular, a very interesting area of consumer weakness at the moment. And if that broadens out to more sectors, I think then we have a bigger problem.
And then there was DoorDash, which saw pretty great growth. Chris, I've sent you a a tweet that kind of showed the comparison of the restaurant comps and DoorDash, but I've always wondered, like, should we be really watching DoorDash to see how the economy is really doing and how the consumer is really doing? It always fascinates me, um, how much people will spend to have their food delivered. And it seems whenever we think we're seeing a slowdown in the economy, it's like people are still door dashing, which could be just high income people doing that. But this is a chart kind of representing the different comps that we've been seeing, and McDonald's has improved a lot from lowering prices because they realized what was going on, and they had to stop the increase.
Do people really DoorDash McDonald's? That sounds crazy to me.
Well, this tweet was essentially just saying, like, how can DoorDash be doing so well with comps, declining at restaurants? That was kind of the idea of the tweet. And, of course, they've got tons of fees that they charge their customers and all of that. But
yeah, it's kind of crazy.
I don't know the answer to that.
I ordered like Chick-fil-A on DoorDash the other day, and it was like a $30 order for two things. And I was just like, my God. And like, yeah, sometimes you just need that convenience. But it is kind of shocking when you add on all the fees and the upcharges, in addition to, what is already now a high price meal, and then you add on the DoorDash stuff on top. And you're right. It's like, it's an interesting dichotomy with some of the restaurant chains showing declines in store sales, and yet DoorDash is still killing it and reporting, super, super high revenue growth. And I think some of that's just, they're bringing a lot more restaurants on the platform. People at the high end of the income spectrum are still, not giving a crap about what it costs when they need that convenience. And but DoorDash is an interesting one to watch, like you said, Nick. I think for a kind of a forward-looking gauge of what's happening. If we do start to see like a pullback there, I think that would indicate, again, like another good indicator of how the consumer's really doing if they start to pull back on the really high dollar excess spending type of plays.
Yeah, interesting. I think we can also look at crypto as maybe a proxy for, spending or gambling or just risk appetite, right? Which, over the past couple of months has been pretty interesting, like in the alt space. Also, I don't know, like on the meme stonk side, are you guys seeing like a 2020 or 2021 type appetite, or is it different? What are you guys seeing? Maybe we can compare what I'm seeing and feeling in the crypto space to also like the meme stonk side.
We saw a little bit of it. It was just kind of a flash there for a couple days. Open Door has been one of the big names there on the meme stock side lately that's done really well. And I actually tweeted about it in May and had a small call position in the 100K portfolio on it, and didn't trade it all that well myself, but was definitely saw the potential there, and we've saw a huge squeeze up in that stock, and they're still pushing that one. Still got a good cohort of traders and retail investors trying to push that one higher. In fact, the CEO was even pressured to step out, which is an interesting dynamic there. But, when that first mooned, we also saw some sympathy plays like Kohl's squeezed, but it only lasted like 2 or 3 days. There were a few meme stocks that took off, and it looked like, oh, maybe we're back in this meme stock craziness of 2021, and it just sort of fizzled out. So we haven't seen it in a broad way. I'd say the strength is more in momentum stocks rather than meme stocks over the last couple of months. So a lot of the stocks that have been winning, Palantir, Robinhood, even some of the quantum computing stocks, or some of the nuclear stocks like Oklo or SMR, a lot of those have just been such high flyers, and they just continue to run kind of almost regardless of valuation. And maybe today we're seeing a break of that, but yeah, that's really been where the strength has been is in momentum stocks over the last couple of months.
Yeah, that's a good point. And that's also, I think, what we're seeing in crypto as well is like, Bitcoin has obviously been the winner for the past 2.5 years. If you look at Bitcoin dominance, that's just continued to go up, despite a lot of shit coins just kind of dying out and having the price chart be like the long kiss of death. More recently, we saw Ethereum kind of have its day in the sun. And the big question now is like, are we actually going to get an all-time high in ETH, or is this just yet another 4K kind of rejection or disappointment here. But we've the big narrative with ETH that's driven this momentum is like Tom Lee basically trying to be like the Michael Saylor of Ethereum is kind of what it feels like. But I posted a chart showing like, this is basically like the 7th attempt at really breaking and staying above 4K. And it's just been such a pain in the ass chart really since like 2022. It's just been a chop fest. And so the question here is like, can this actually become a reflexive trade that just trades higher and higher despite market cap, kind of like the Palantir or the Hood or whatever those momentum stonks are. But for the most part, crypto has just not seen that kind of all tides rising stuff. I mean, if you look at a lot of the charts from legacy stuff, especially like the L1 competitors, like a lot of them are just really beat to death and underperforming. And we still just haven't seen that culling, that mass death that I've been looking for. But if you look at others, like when you exclude large cap, we are above the 200 period moving average, and we have been making higher highs and higher lows. So we have the opportunity for a kind of a continuation bull market into the end of the year, kind of like we saw into the November, December of last year. But that bull market was very short-lived. So it's kind of unclear right now, are we going to get that kind of all tides rising altcoin season, or are things just so hot and Bitcoin's been in this bull market for so long now, going on 2.5 years, like, do we need a much bigger shakeout? And just looking at the Bitcoin chart today, we are getting a pullback. We've got this like higher range where we've been above like 110K and between 110 and 120. And we actually haven't been here that long compared to prior consolidation points that have taken, 6+ months before getting like a quote unquote real breakout. So 120 was our target from the start of the bull market. And that's why I've actually been taking some profit up here. But the one thing that I've been thinking about, we've been talking about this in the market update classes in the community, is the last market cycle we saw so much correlation with stocks. Like basically in 2022, stocks and crypto had the same top and the same bottom within a few weeks, right? So I'm wondering, like, what matters more, the 4-year market cycle with the halving cycle and kind of that, self-fulfilling prophecy, or what the stock market does? So this is one thing I wanted to talk to you guys about and ask you is, what if stocks just keep grinding higher for the next 2 years? Because the expectation in Bitcoin and crypto is that 2026 is going to be a red year. I know it kind of feels like a crowded trade that a lot of people are, going to take profit in between now and the fall. If you just look at the time frames of prior market cycles, that's where the bull market typically tops out. So it's like, does that play out? Or if stocks keep grinding higher, does Bitcoin go along with it? And, we can look at things like all the old school, on-chain indicators. But the thing that's different now is we do have all this institutional money, and there's a new narrative that we're not going to get bear markets, which I think in a prior show, I said, I think that's bullshit. But what happens if stocks do grind higher? Does Bitcoin trade inversely to that, or does it just keep grinding higher with stocks? Have you guys thought about that, or does that make sense, or do you have any thoughts on it?
I think it's going to be tough and kind of few and far in between that Bitcoin is completely negatively correlated. And I think it's going to be hard to not see Bitcoin kind of move with stocks for the most part. Will there be outlier times in the market? Something going on in the economy, monetary policy, interest rates, whatever it is, fear, driving that negative correlation at times, yes, but I think generally you're going to see it be move more so together than not.
Yeah, now that you have the so many crypto treasury companies. I think that's also blurring the lines between stocks and crypto in a lot of ways as well. And you can have, cyclical effects because of that as well. So you may have, already we've seen some NAV compression in the last couple of weeks for some of these crypto treasury companies, MicroStrategy included. And, if you get into, I think, a down cycle, like a more prolonged down cycle, a bear market, that can exacerbate the bear market and the underlying asset if you have, the pressure from those companies potentially. And there's been some talk, obviously, that there may be some counter-cyclical plays. Strategy or MicroStrategy may try to actually go out and buy other crypto treasury companies or buy the underlying asset, with the capital they have on their balance sheet during tougher markets. But I don't think it's going to be enough if you're in a real bear market to counteract the overall selling pressure. And so, yeah, I think we're gonna have cycles, like, because human nature isn't going to change, and so there will be periods of weakness and maybe even some bear markets. So hard to call that. I think listening to price action, it's not really telling us that we're there yet, and fundamentals aren't really telling us we're there yet. So you don't want to be too early in trying to call the end to the cycle. There's a lot of things, retail investor participation. There's lots of things that are still pointing to, we're still in a bull cycle for both crypts and stocks and crypto. And so you kind of got to party, you got to party while the music is still going in a lot of ways, right? While also being mindful of risk.
We also have to remember we just had a 20% correction in stocks. So we went through it. And I don't know if I see that happening right away anytime soon again. I think we're due for like a 10% correction, and Bitcoin is probably going to come with it, right? But we have to remember we did just go through a pretty deep drawdown.
I will say this, though. One thing I've been thinking about lately, I am a little bit worried about the next economic recession, because I think with AI being a lever for companies to potentially cut costs and cut headcount, that could make the next recession worse when it comes to the actual jobs data and firings and layoffs and the unemployment rate. And that's where I'm a little bit nervous about the next economic recession feeding on itself and getting to be actually a pretty nasty one if we do go down that path at some point.
Mm-hmm. Yeah, good point. I mean, we've been keeping a close eye on the unemployment data and like labor participation rate, things like that. And that, I think, is maybe one of the biggest glaring risks out there, right? Like, what if there is mass disruption and mass firings? And yeah, that could send a shockwave and a ripple effect through the markets. But one thing, just kind of looking at the big picture, this is something that I went through in the community and one of my live Q&A classes. Was I just looked at the whole pie, right? I was like, let's analyze everything from technical analysis, correlating factors, on-chain data, market sentiment data, and then like a thesis, right? So like when it comes to like the TA, the technicals have been bullish just across the board, right? With stocks, gold, Bitcoin, like pretty much all risk assets. And the major thing that I think is bearish here is that we've done like this 1-to-1 measured move, and like 120, I think, was a target for a lot of people. So does that become the top? That's only evident in hindsight. Like we don't know if we're going to go parabolic through it, or if like that first major zone is going to be the target and the top. And so that's why I keep going back to this idea of like correlation actually matters so much more now, like with what stocks are doing. And I mean, if you just look intraday, like here's a, for you guys listening on the audio pod, I have an intraday chart, a 1-hour chart of Bitcoin CME futures compared to either the S&P E-mini futures or the NASDAQ. It really doesn't matter. They're both very similar, but you can see like today, on a day where stocks sell off right off of market open, you can see Bitcoin kind of goes right along with it. And that's happened the past few, either pre-market panics or market open panics. I think the algorithms and traders are doing kind of a self-fulfilling prophecy where when stocks panic, the algos pull back on buying Bitcoin. And so it just creates this like correlation effect, which I don't want to see. I want to see Bitcoin do something either inversely or just non-correlated. And so, yeah, I don't know. I'm almost like just putting more and more weight on this than anything else. It's like, yeah, the on-chain stuff matters. Yeah, the Bitcoin treasury stuff matters. But whenever you see this like intraday price action that's just so blatantly clear, it's like, okay, well, maybe that's the most important thing right now. So that's why I think it is important for even just crypto only people to understand what's happening in stocks and what's happening in the macro side and what the risks and rewards are there.
Well said. Yeah.
That is a stunning display of price action being very similar intraday. That's pretty crazy.
Yeah, it's like in a way it makes it so much easier, and in a way it makes it harder. it's a strange thing, 2013 and 2017, the price action was driven mostly by Bitcoin specific traders and degens and cypherpunks and stuff. And then it was like 2021 was more diverse market participant pool, and we had more institutional players, and we had futures impacting it and other derivative markets. And today it's even weirder. It's just so much more global. Now on the upside, the thing that I will say is like all these treasury companies and governments that are buying, I think they're way less likely to panic sell on dips, unless, like Trav, you were saying, like if there is some kind of reflexive, like deep bear market that causes maybe some of these to have to capitulate if they're either over levered in a certain way, which I know some of them aren't. But yeah, I mean, that is an interesting case to think about, is if the popular narrative in retail is, oh, thanks to Michael Saylor, we're never going to have a bear market again, right? And then a bear market happens and something reflexive happens on the downside. I mean, hell, that could be a great buying opportunity. I'd be there buying the blood. So yeah, I think it's interesting just to think through these scenarios.
I'm trying to figure out why people are coming to the conclusion that you wouldn't see a bear market in Bitcoin because of Michael Saylor, just because he's got he's the whale just propping it up. What's the mentality behind that?
Up only.
I don't understand.
No, it's I think that there is a really good supply dynamic in Bitcoin that has been true, but it's certainly true if you have crypto treasury companies locking up even more supply and countries locking up more supply, and then the supply demand imbalance gets really tight. You theoretically could have a less severe downside case, or maybe even you could perform negatively correlated to other risk assets, but we haven't really seen that yet. Like Chris was showing, you look at shorter term timeframes, you look at, during bear markets, like Bitcoin tends to act more like a risk asset, even if it has, certain other time periods where it can be a little bit less correlated. But yeah, I mean, I think most serious investors probably don't assume that you're never going to have a bear market in Bitcoin, but there is a case there with supply being tight that you could have it go parabolic even in a weaker market. But I don't know.
Yeah, I mean, I see it more as like just another parabolic blow off top, right? Like every market cycle, there's always a reason why Bitcoin's going to be up only, right? And it never has played out. I don't think it's ever going to be like that. Like there's going to be bear markets. But yeah, the question is like, do they become less deep over time? I think that's maybe true. Maybe we don't get 70-80% drawdowns. But yeah, just the correlation in stocks, I think is just too clear to ignore. And we've talked about the upside supply crunch possibility, right? Where there is this, just FOMO panic. And then, we actually, and there is evidence to support that supply is a problem. Supply on exchanges has kept coming down, and I believe is still at levels that are lower than like 2018. And so does that continue? We'll see. But yeah, I think it's just silly to think that there's never going to be pullbacks or anything like that. Nikki, I wanted to actually ask you about your tweet thread that you had here, what was this, a week or two ago, where you were talking about allocation. Because I know a lot of your clients are Bitcoin whales or people that have built a lot of wealth both in crypto and stocks. So like this was interesting because it got people talking and thinking. You said there's a big argument over how much your Bitcoin allocation should be. Some advisors say 1 to 5%, others say 10 to 15%. I see allocations up to 90%. And here's the wide range of Bitcoin allocations I see and how to choose what's best for you. Instead of just reading through this tweet thread, do you want to, I guess, just kind of recap this? And then I have a couple follow-up questions.
Well, first of all, I think that we need to recognize that people that have up to 90% crypto, mostly Bitcoin allocations, it's because it's for a few different reasons. A, they were early to the game. So when you have low cost basis, you can hold those, higher allocations. They're not rebalancing out. They're just letting their winners ride. So that's something to keep in mind. A lot of people that are new coming into crypto, you probably aren't going to have that same, ability, especially to be able to stomach the volatility, the risk. So when we're looking at, Bitcoin allocations, I'll just kind of speak on Bitcoin specifically since it's the whale or the big guy. You want to not, a lot of people focus on the drawdowns. They focus on the risk. Oh, it's so risky. I can't have more than 10% because of the risk. And that's true. And the way that I like to work with people on this, though, is we also have to think about the reward potential on the flip side. And the reason people want to own so much Bitcoin or crypto is because the returns have been just outsized compared to the S&P and other asset classes. So I like for people to start, thinking through, oh, okay, let me start with like a 5% position. How does that feel? How does the downside feel? What about the upside? And you can kind of get a feel for your comfort level by having a starting point and then continuing to move up. An exercise that I've practiced with people is, okay, let's think about, you're at 30%. You want more crypto. Let's talk about a 50% allocation. And oftentimes when we're thinking through the downside scenario, they backpedal and they're like, oh, that actually gives me anxiety. I think 50% is too much, right? So I think start with a percentage, start with a lower percentage, 5%. Hell, even start with 1%, and then work your way up and kind of work through that scenario. How does the downside feel? Well, but we have this upside potential too that we have to consider. And you kind of land on where you're comfortable eventually, right? Most people, if I say, hey, how does a 50% crypto allocation feel? Thinking through, you can have a 70% drawdown, up to a 70% drawdown in this Bitcoin, or more if it's an altcoin or something like that. Oftentimes they're backpedaling and they're like, yeah, let's move that back, let's go down from 50%. Let's try something else. So a lot of it is just thought exercises, trying to figure out where you need to be. And also it's capacity too. It's like some people can afford to have more risk in crypto versus others. I think that you really have to think about what you can afford to lose, and thinking about, that downside is really important with this. So, yeah, there's reasons people with larger allocations can stomach it. You have to realize if you're new to this, like, you're not going to be that person necessarily to be able to stomach a 70, 80, 90% allocation. So, and I'd have to pull that tweet up to see what those, there were a bunch of reasons why those people can stomach the higher allocations, but definitely being early to the game is a big benefit. And that's why they can do it. And you do not have to be a hero.
Yeah, here I think these are the reasons you said. Most people can't stomach this high of an allocation, but here's different reasons why they can. Like you said, somebody was early, or they have like a really high risk tolerance, or crypto was their intro to investing. I know we see a lot of people that, they come into the wealth building community through like crypto, and then they end up going into Trav's world, into the stock side of things. And then also like their concentration in crypto is paid off with massive wealth. So they're all, already wealthy, or they just don't trust holding fiat, right? We talk to a lot of people from countries outside the US that are like, yeah, my options are Bitcoin or like a really hyperinflationary, like shitcoin fiat currency, right? Um, and one thing that I think is interesting is like, you don't have to be in crypto for 10, 15 years to get insanely wealthy. And here was an example. Like this was a guy, I guess this was about a month ago that this tweet kind of went viral. He goes, "Today I sold all my crypto. This is enough for me. I turned $100 into 2 million in 4 years." So for this person, 2 million was like their number, right? I don't know how many X's or what percentage of profit that is, but for me, that's enough, right? Now I can invest in lower risk assets and live the rest of my life comfortably. Thank you for everything. I think this is beautiful. I think it's brilliant. I think this guy or lady or whatever is on the right track, thinking about, okay, I hit a number. Now, how do I play defense? Because how many times have we seen people that have hit their number, could be 2 million, 5 million, 100 million, whatever. How many times have we seen people hit that number and then get greedy and get more aggressive and then lose it? Right. So Nick, does this kind of mirror people that you have worked with, or like, is this a common thing that you've seen?
Oh, yes. Yes. And it's for some people, it's harder to do the diversifying out into the lower risk asset. They get attached to the crypto. Like I said, it's what's worked for them. It's what they are comfortable with, believe it or not. But this is the play, get to your number and protect your capital, protect your wealth. And granted, that doesn't mean completely exiting out of crypto. You can still hold a position in crypto and protect your wealth. It just means getting a little bit more defensive, right? This person, they want it all out. Fine. That's great. Good for them. But it doesn't have to be an all or nothing. And that's something that I work with people a lot on.
And Trav, you've seen that in the stock world too, right? Like people that'll have like a big options play or a, just big equities play. Like how do you play defense in the stock world too? And also like people that are coming from crypto into stocks, like how can they look to take, a life-changing amount of money and then use stocks not as a hedge, but as I guess a diversifier to lower that drawdown volatility?
Yeah, it's a great question. I mean, we've definitely seen people with like, 90% of their stock portfolio in like Nvidia or, a Palantir or a Tesla. And, it's like life changing. But then it's like, hey, just don't give it all back. You made life changing wealth. So the best way, in a stock portfolio is just to reduce your size over time. You don't have to do it all at once either. So I always say like, I use a scale in and scale out approach, and your outcomes will not be, at the far right tail or the far left tail of the distribution if you do that. But, if you've already done that, if you've already got a right tail outcome, then maybe, shift down a little bit, diversify out a little bit, maybe add some index exposure, or slowly start to sell, long-term capital gains, reduce your position size a little bit. It's not necessarily a bad thing, once you hit your number, especially. So yeah, I think just starting to kind of like shift your overall portfolio is a big one. And then it is an interesting psychological change, because you go from someone who like bet big and like has that aggressive personality to be able to, put it all into a stock or a handful of stocks. And so it oftentimes, unfortunately, I think you see a lot of people that can't make that psychological transition. That's like, I think what we help a lot of people in our community with is like, hey, it can still be exciting, like you can still take swings at stuff. You can still have like exciting positions on the stock side, even if you came from the crypto world and you're up 1,000% on something or 2,000% on something in a short time frame. It's like, we have stuff in the stock world. There's always a trade. There's always another trade, right? So it's like, trying to help people understand that and help people understand like the base rates of like, how often the stock market goes up over a 10 or 20 year time frame. The answer is almost always. And so, yeah, I think helping people to to just reduce risk as they do get into those larger levels of wealth, because the worst thing that you can do is to hit your number or get wealthy and then give it all back. Like there's nothing worse than getting rich and then going back to being poor.
Yeah.
Like, that I think for most people is psychologically worse than just being poor, or not feeling like you're at your level of wealth you want to be at. So yeah, don't be the person who gets wealthy and then gives it all back in the next cycle. Take some
And dude,
profits.
I think this is a good example. Like, so for anybody that doesn't know, Trav started a when did you start the portfolio? It was like last fall, right? The
Yeah,
100K
late October
portfolio?
of 24.
Okay, so he started a new public portfolio where he started 100K all cash, and then has been investing it slowly, and then has actually been really outperforming the markets. Where are you today, Trav? Are you still kicking the S&P's ass?
Yeah, it's up 32% in about 10 months time frame. So yeah, as of today, 132. I think the S&P's up like eight or nine since that time
Yeah.
frame. I have to double check.
And the important thing for anybody that's like in crypto that goes, oh, 30%, big deal. But he did that with very low volatility and small drawdowns. And there's a video on Stock Geek TV YouTube channel where he walks through the risk adjusted returns and like why that matters. So compare that to, just like the performance of others, right? So others is the total crypto market cap excluding the top 10. From the start of the year, it's down like about 20%. So you're not even positive, right? And so this is what a lot of crypto people will experience, is they'll make a lot of money and then they'll experience these depressing drawdowns because they try to over diversify into crypto. My argument, and the reason why I'm such a big proponent of stocks in addition to Bitcoin, is because stocks actually do perform well over time. Altcoins do not. Altcoins are garbage over time. Most of them are going to zero. And so, I know there's a lot of YouTubers out there that are like the top 100 alts to hold for 5 years. It's like, okay, you do that, you're going to destroy your wealth, right? Bitcoin is in a class of its own. Everything else is shit. That's how I think about it, right? But when it comes to stocks, it's like, yes, you can diversify into stocks and you can have really good risk adjusted returns. And that's where I think Trav, with his, hedge fund experience and, just being a professional stock investor, like demonstrates that in real time to all his followers and the people in the community, is like, stocks, I think, are a very, very important piece of a portfolio, especially if you've hit some kind of wealth number where you're like, I don't want to give all this back.
And might I add, the trader in me wants to speak for a second. We've had quite a few members in there be like, dang, some of these stocks trade like shit coins. It's awesome.
Yeah.
You can make just as much money trading in stocks if you can, spot the right ones.
Yeah. I mean, look at what's happened with, a lot of the Momo stocks this year compared to crypto. I mean, if you were just waiting on crypto to do something, yeah, there's a handful that have moved, but there's been more opportunity in stocks, I think, with Momo plays than in crypto as a whole. So yeah, Bitcoin's been kicking ass, and that's where I've made the majority of my returns over the last 2 years. But also stocks have done pretty damn well, and there's always something moving over there. So anyway, that's my soapbox. I just think that that's a really good way to demonstrate for crypto only people why you don't want to ignore stocks.
All the right, worlds guys are colliding now anyway.
Yeah,
the stock and crypto worlds are colliding. All right. MSTR, IBIT, all these treasury companies going public. So that's interesting. Mm-hmm. You can't escape it, crypto people. You have to come to our stock world.
Yeah, well said, man. So what else, guys? I know we had a lot on the docket. I'm still in like summer mode, but what did I miss? What other important things do we need to talk about?
I think we hit most of the major topics, but we're definitely like on my radar. We've got the Jackson Hole meeting on Friday. That'll be important because if there's a little bit of risk here that if Powell comes out and is like obstinate and is not like not confirming that there will be a rate cut in September, the market's really not going to like that, because again, the market's pricing in as of today about an 85% chance of a rate cut, a small rate cut, 25 basis points at the next meeting. But that would introduce some significant risk if we get a different message from the Fed on Friday. So that's something that's definitely worth watching. We are in a little bit of a weaker seasonal period for stocks right now. We are seeing momentum sell off. So we're just going to keep an eye out there for, any opportunities, honestly, if we get a deep enough dip. So watching for that. But otherwise, it is a little bit quiet here, I think, until we get past Labor Day.
Trev, do you think that we should see a cut or not?
Yeah, I do. And I think, the debate gets lost sometimes between like, a lot of people are like, the Fed should not be cutting when risk assets are doing well. The Fed should not be cutting when we're seeing, higher inflation numbers versus the prior month. But I think that just kind of ignores the level that we're at right now with rates. Like, I think rates are just too high relative to the current, even with slightly hotter inflation numbers. You're up at, 4.25, 4.5. And that just feels a little bit high relative to like a CPI that's been like sub 3 for a number of months. And so it's not that I think the Fed should be on like a cutting cycle where they're cutting every meeting for the next 6 meetings, but I think they're just at a level that's just slightly too high. So a couple of small cuts, and I think we get to a level that's more stable and a level that we already probably should be at. I don't think they need to take rates down to 1 or 2%. And so I think that's sometimes the nuance gets lost in the conversation about like, should the Fed be cutting or not? I'm not saying the Fed should be cutting aggressively here, but what I am saying is I think they've been at too high of a level for too long. And I think a 25 basis point cut would be fine in September. And I think rates at 3.75 or 4% by the end of the year kind of makes sense. And that's where we should be. And there's all this like, debate and Trump versus Powell. And it's like, let's have a few baby cuts and then see what happens. It's
Yeah. Is the baby cut really going to change the trajectory of everything significantly? Maybe a little bit in the housing market. A little bit.
Yeah, and I think it would be nice, actually. I think it would actually help housing if we did get a little bit of, if we alleviate a little bit of pressure there, and we actually, lower rates actually could incentivize people to build more houses because, the financing costs and things like that. And having cheaper financing costs can help, build out some of the AI infrastructure and the energy infrastructure that the U.S. Desperately needs to do. So, yeah, I think it helps on the margin and would be good and could actually be, oddly enough, could actually help the inflation problem if you get more housing built and things like that with slightly lower rates and better financing. So, yeah, there's a balance. There's a balance. If we're at 1%, like in a risk-on environment, like we're gonna be back in 2021 where things are getting silly. But yeah, I don't envy Powell though. He's got one of the toughest jobs in the world trying to appease all the different policymakers and people at the table.
Yeah.
I think I'm with you. I think he needs to just do the cut, or the board needs to just cut, baby cut. And I don't think it's going to make or break what's going on right now. So,
yeah.
Yeah, I mean, looking at price action, man, there is some downside risk here. So we know we've been in this like slow grinding move, and really since the big sell-off back in April, there hasn't been, at least in stocks, there hasn't been a significant pullback more than like 2 days in a row. Like every time we get a couple days of a sell-off, the price action has gotten bought up pretty quickly. So if you look at like the pivot low from April 7th to where we are now, like if you look at a Fibonacci retracement, like there is actually some pretty significant downside potential from here. Like maybe, I think, Nick, did one of you guys say like a 10% move seemed reasonable?
I said 10%.
I mean, the TA kind of agrees with that, where the 100 and the 200 period moving averages. So that, I think, is what is causing Bitcoin to pull back as well. Is like, okay, we've had such an aggressive upside move from that April low, right? Like Bitcoin was up over 65% ish. So, pullbacks seem interesting, and I'm definitely a dip buyer on anything juicy. So, yeah, we'll see.
My take was going to be any correction we get, it's going to be shallow and bought up quickly. I think a lot of people just didn't expect this run to begin with. And there's still a lot of cash out there, money market cash too, especially if we're going to see rate cuts. I think earnings estimates are also kind of supporting dip buyers to really come in if we see a correction too. So that's my take. I don't think it's going to be a very deep correction, and I think it would be appetizing to investors to buy at this point. Unless
TD, do you agree?
drastically changes, but yeah.
Yeah, I tend to agree. I mean, until we see evidence otherwise, like it's like the dips are getting bought up quick, and yeah, most of the fundamentals are still supportive of at least a market that has support, and so yeah, I do. There are some like technical factors within the market that could cause like a little panicky sell off here in the short run, like because momentum was so overbought, because you had you have so much like passive buying, and you are going into a weaker seasonal period. You're going to a weaker seasonal period for retail stock buying. So, you could have some technical factors like that collide. And if you get like a bunch of quant funds at once reducing exposure, you could get a pretty nasty little like 5 to 10% correction, which would not be out of the ordinary, certainly. So I think we could definitely have further to go here, but I think most likely we will see it get bought up after probably a 5 to somewhere between 5 and 10%. I don't think it would be worse than that.
All right. Well, we'll see what happens. I know, again, Bitcoin's at a major area, but stocks have just been in this stair-stepping, grinding price action. So the correlation is there. I guess we'll see what happens with retail earnings over the next week or two and see if there's any bellwethers there. But otherwise, guys, I'm going to head back out on the motorcycle. I've got another trail I want to hit right over there. So
there we go.
Hell yeah.
Yeah.
Checking out on us.
That's it. I mean, look, I've been doing a lot of trading from the phone, and
sometimes
I've got
the
alerts
best
set.
course of action is no action.
Yeah.
Wait for the opportunities.
We might be in that zone right now for sure.
The last time I checked, which it's been a while, but I only actually place trades on about 4% of days. So 96% of days, I'm not pressing buy or sell. I'm mapping, I'm planning, I'm waiting, I'm holding. And then when it's time to pounce, you go for it. Yeah. All right, guys. Anything else we should talk about before we wrap it up? Or is it motorcycle time?
Motorcycle time, baby.
Motorcycle time. It's time for me to go explore another ski village. So
there we go. Retail therapy and motorcycle time.
Gotta go.
Pickleball.
Yeah, man. Yeah, Trav, I heard you've been winning some pickleball tournaments.
Yeah, pulling a few out. It's been good lately.
Nice, man.
Yeah.
Well, guys, thanks for watching. Make sure to subscribe to the podcast on your favorite audio platform. Also, subscribe to the YouTube channel. Go to wetalkmoney.com if you have a question for the show. We will be doing a Q&A show here in the near future. And feel free to check out the wealth building community at wetalkmoney.com/community. And that's it, guys. Anything that I missed?
All good.
You're doing great.
All right. Almost forgot how to do this show. It's been so long.
Nailed it.
All right. Thanks for watching, guys. Share this with a friend if somebody is making dumb decisions and needs some help.
Absolutely.
Everybody knows somebody. All right, guys. Have a good one.
Cheers.